Welcome to QuanX News. I'm your host Prasann Koli, here to bring you the latest stories shaping India's financial world. Let's dive in. First, a quick word to our sponsor. QuanX News is brought to you by Quintox Solutions, an emerging IT startup driving innovation and transformations. Discover more at Quintox Solutions. Kicking off with the market wrap for June 3rd, it was a challenging day for Indian equities. Benchmark indices Sensex and Nifty extended their losing streak for third consecutive session. The Sensex closed down at 636 points at 80,737, while Nifty shed around 174 points to settle at 24,542. Market breadth was negative, with about 1,701 shares advancing against 2,148 decliners and 134 shares remaining unchanged. This downturn was largely driven by weaknesses in auto, banking, and IT stocks, though gains in metal stock and resilience in small cap indices helped to prevent a steeper fall. Contrast, Zinka Logistics Solutions staged an impressive recovery after initial losses of over 4%. The shares rebounded to closely 2% higher than triple four rupees. This turnaround was fueled by a substantial block deal valued at 692 crore rupees, involving the exchange about 1.63 crore shares or 9.22% of the company equity at 423 rupees apiece. Swiggy shares experienced mixed day, despite Morgan Stanley initiating coverage with overweight rating at the price at 405 rupees at 22% upside from Monday's close. The stock pared all its gains and flat at 333 rupees. The brokerage bullish outlook hinges on Swiggy's improved execution in food delivery and expanding the total addressable market in quick commerce and its aggressive investment strategy. Zomato, also referred as Eternal in some contexts, didn't fare as well, with its share falling nearly 2% to close at 238 rupees. Didn't fare as well, with its shares falling nearly 2% to close at 238 rupees. This was despite Morgan Stanley reiterating the stock as a top pick, citing strong leadership in food delivery and quick commerce, robust unit economics, and healthy balance sheet. The brokerage even raised the forecast for Indian quick commerce market to valued at $57 billion till 2030. Their price target for Zomato remains at 320 rupees. Aptus Value Hosting Finance India saw shares sink by 9%, closing at 307 rupees. The drop was attributed to a block deal involving 3.71 crore shares. Reports suggest that the private equity firm Vestige Investment was looking to divest 9.8% stake in the company. This overshadowed Aptus' strong March quarter result showed a 26% year-on-year rise in net profit. Shares took a significant hit, tumbling over 10% to close at 21 rupees. This dive came after a large block deal where 3% equity stake in the company translating to nearly 9.24% shares reportedly changed in hands. The transaction valued at 2022 crore rupees occurred at average price of 21.5 rupees per share, with leading private equity firm rumored to be the seller. On a more positive note, defense stocks saw a uptick. This is likely to attribute rising geopolitical tension, particularly in recent escalation of Ukraine-Russia conflict, which includes Russia's largest drone assault since the war began. Such events often fuel the optimism, increase the defense spending and demand. The broader sentiment, India weeks measure the market volatility climb at 3.9% to 17.69, indicating increased nervousness amongst investors. Adding to global concern, the OECD is projected as US economic growth slow down to 1.5% in 2026 and noted that the trade policies under Donald Trump have pushed average US tariff rates to the higher level since 1938. Globally, OECD economic growth slowed down at 2.9% and this year remains through level. PK Vijay Kumar, Chief Investment Strategist at Geojit Investment Limited, commented that with a lot of uncertainty in geopolitical tariffs, and trade market will continue remain volatile. He also noted that high valuations are concerned. Strong money flows and retail investor presence could keep Indian equities at higher valuations. An anticipated 25 basis point rate cut by MPC on June 8 might also favor the rate sensitive sectors. Sector wise, on NSE, it was a mixed bag. Nifty Private Bank, Nifty PSU Bank, Nifty IT, Nifty Energy, and auto indices saw declines. However, Nifty Realty was a standout gainer with up to 1.49% with all modest gains also seen Nifty Metal and Nifty Small Cap 100. From a technical standpoint, the Nifty dipped toward 24,500 zone and subsequent recovery played out as expected. However, the index remains sideways range established nearly a day with resistance of 24,770 and 24,850. Analysts suggest that if it declines and stays remain above 24,650, a bullish breakout could be on the cards, keeping the medium term range as 25,460 to 26,200 intact. Immediate support is seen at 24,500 to 24,060 zone. The Nifty movements, the top gainer in indices includes Grasim, Hindalco, Shriram Finance, Bajaj Auto, and M&M. On the losing side, we saw Apollo Hospital, Bajaj Finserv, Coal India, Maruti Suzuki, and Adani Ports among the laggards. That's all for today on QuanX News. Thanks for listening. Stay curious, stay informed, and I'll see you in the next episode.